Welcome back to Financial Management class. For today, we will be talking about short-term financing. So short-term financing refers to debt originally scheduled for repayment within 1 year. So this means na ang utang nato na-acquire nato or na naka-incur ta og utang nga bayaran nato sa sud sa usa ka tuig because that is the requirement para matawag siya nga short-term if it is to be paid within 1 year. So this is used to finance all or part of the firm's working capital requirements or sometimes to meet permanent financing needs. There are several sources of short-term funds. We have first one is a line of credit. So this line of credit provides the business a certain amount of money nga pwede niyang i-borrow from a bank which would be unsecured. So meaning dili na kinahanglan og collateral para makautang. So since this is a short-term financing, so this will be paid within 1 year. So this is a common way to finance a temporary cash deficit, and firms use short-term bank loans which often arrange for a line of credit. Then we have the second one is the letters of credit. So since letters of credit siya, this is a letter gikan sa bangko that will guarantee a buyer's payment to a seller will be received on time for the correct amount. So in here, ang buyer nipalit siya dito sa sellers. Of course, ang buyer ang naay utang adtong seller. So ang gibuhat ani sa bangko is naa siya'y letter nga gigama nga gigaranty niya ang bayad sa buyer. Kung ang buyer dili siya kahimo sa iyang payment, dili siya kabayad, the bank will be required to cover the full or the remaining amount of the purchase since the bank already guaranteed in behalf of the buyer. So with a letter of credit, the bank issuing the letter promises to make a loan if certain conditions are met. So typically, the letter guarantees payment on the shipment of goods provided that the goods arrived as promised. So the letters of credit could be revocable, pwede siyang makancel, or it could be irrevocable, dili siya pwede makancel if there are specific conditions that are met. The third way, as a source of short-term financing would be our accounts receivable financing. So in here, ang accounts receivable nato ang atong source of funds. So remember, we received accounts receivable or naatay record ng accounts receivable because our buyers, ang atong mga buyers or atong mga customers or clients nato ni acquire sa atong goods and services on account. So, nangutang sila. Since it will still take time before we can fully collect their account, makolekta nato ang money from them, we can use our accounts receivable para maka-generate taog money, para maka-raise taog money. Kung saan man na nato para maka-raise taog money, we can use either the assignment method or the factoring method. So, in assignment method, so this means that the lender has the receivables as security, but the borrower is still responsible if the receivable can't be collected. So, in here, mangutang ta sa bangko. So, di ba, mag-need ta og money, nya dili pa man nato ma-collect ang money kay magwat pa man ta nga mubayad atong customer. So, kinahanglan man gyud nato og money for our day-to-day operations. So, we consider assignment. Unsa man ning assignment? Mangutang ko sa bangko or any financial institution where we can arrange the borrowing. So, mangutang ta dito sa financial institution and then silbing ang atong receivable may gamiton as security or our collateral. So in here, 'di ba? Kita man ang entity. So the entity borrows. So kita ang borrower. So ang borrower ang entity. And si entity po naapod siya mga customers. So iyang mga customers ito siya maningil og mga accounts receivable. And then si borrower mag-need or si entity which is the borrower manginhanglan man siya og money so mangutang siya og money from the bank. So here the bank is our lender. So unsaon man nga pautangon ta sa bangko. So moingon ang bangko nga kinahanglan na akay mahatag nako ang collateral. So unsa may gi-offer ni entity or ni borrower, iyang i-offer ang customers nga accounts receivable as a collateral or a security. So pag iyahan na lang gi-offer as collateral, si bangko magpautang na siya og money dito sa borrower or sa entity. Unsa na may mahitabo ron nga gihimo man niyang collateral ang accounts receivable sa mga customers. So, balik ta, di ba gipautang naman ni bangko si borrower or si entity. So, gipautang na niya money. So, si borrower, mag-record na siya sa iyahang loan payable or sa iyahang notes payable. Di ba naaman siya mga customers nga magbayad pa man siya sa iyaha, di ba? Mga customer man niya. Ang mahitabo karon, every time nga naay payment ang mga customers, i-apply na niya adtong bayro nun ni entity ngadto sa bank. Di ba si entity nang utang man siya sa bangko? So again, every time na siya makolekta gikan sa customers, iyaha lang i-apply as payment sa iyahang utang sa bangko. So kada magbayad ang mga customers, i-forward na niya, i-forward niya tong bayad ngadto ni bank para maimpas ang utang ni entity. What if ma'am ang gipautang sa bangko kay 1 million, ya ang nakolekta na ni entity nga receivable from customers is only 800,000. Okay? So 800,000. So kulang pa siya sa iyahang utang sa bangko. Dili pa niya mabayad fully ang bangko. What if ang collection na ni borrower or ni entity can abot na og 2 million? Kani bang 2 million ibayad ba na niya tanan sa bangko? Dili. Ang bayaran na ni borrower ni bank is kutubra pod sa 1 million. So ang sobra sa 2 million padung na ni entity, padung na ni borrower. Okay? So, apil na ni siya ang i-forward including na nga katong of course katong principal payment sa utang niya sa bangko o katong interest. So, bayaran na ni entity or ni borrower. Okay? So, man siya ang assignment. I-assign niya ang receivables. There are actually two ways on how to record or two types of assignment na atay gitawag nga notification basis and naa po tayo gitawag nga non-notification basis. Unsa man ning notification o non-notification? Pag may tag notification, gi-inform nato si customer nga ang receivables or katong bayro no ni customer ngadto ni entity gi-assign na niya sa bangko. So what happens is since gi-notify na ni entity or ni borrower ang mga customers niya nga gi-assign na ang receivables ngadto sa bangko, ang mga customers adto na sila mobayad directly sa bangko. Unya si bank, iya na i-record ang mga collection. Nya i-minus na ni bangko sa katong bayro no ni borrower. And then, what if it is non-notification? Ang mahitabo is wala niya gi-inform ang customers, wala niya gi-inform ang customers nga naa di ay wala ni gi-inform ang customers nga kanang gi-assign ni entity ang receivables ni customer ngadto sa bank. So non-notified o not notified, wala niya gi-notify ang customer. So ang mga customer magsige pagbayad sa borrower. Diba? Or sa entity. Adto pa sila mag-forward sila ang payment. Kaya wala man sila kay ba nga gi-assign di ay ang receivables ngadto sa bangko. So ang customers padayon sa pagbayad sa entity niya as a borrower, i-forward na pod ni entity ang collection ngadto sa bank para mabayaran ang iyahang utang. Next is we have the factoring. So pag moingon tag factoring, gibaligya. So we can no longer wait for the customers to pay us. So what we do is we sell the receivables. Kaya di ba convertible to cash man na siya once makolekta na siya. So ang gibuhat ni entity, iyahang gibaligya ang accounts receivable para na siya immediate cash. Pero inig baligya niya sa receivable, dili na siya exactly the same sa receivable. So for example, accounts receivable nato is 2 million. dili pod ang proceeds kita mang loan siya, dili po siya exactly equal to 2 million. Okay? Dili po siya exactly equal to 2 million. Ang bangko maliguro po na sila nga di po sila maalkansi, so pwede nga ang ilaha lang i-allow nga sana ibayad niya sa entity pwedeng mga 1.5 million lang or 1.3 million kay di ba maniguro sad ang bangko kay basin dili mamayad ang mga customer kay di ba pag ibaligya ni entity ang accounts receivable ngadto sa bank, ang bank naman ang mangulikta. So siya na ang mangulikta sa receivable. So what if ang mga customer adtong entity dili mamayad, di ba? Alkansi ang bangko niya gibaligya na baya sa iya hatong receivables is considered sold. So ang nanag-iya na sa receivable kay ang bangko. So siya na po problema sa pagpangulikta. Mo na nga dili jud exactly the same with the book value of the receivables or ang dili pud exactly equal sa book value sa receivables ang ipautang sa bangko. So factoring is widely used in clothing, furniture, and appliance industries. Factoring is more expensive than a bank loan. However, because the factor buys the receivables at a discount from their actual value. So there are two types. We have conventional factoring, wherein the receivable is discounted and sold to the lender, which is what we call as the factor. So here, mao ni siya tong, lender, mao ni siya tong bank, which would be also called as the factor. So once it is sold, collection is the factor's problem. To akong i-mention earlier, kaya ang mangulikta na ron kay katong bangko, katong factor. And the factor assumes the full risk of default on bad accounts. When we say maturity factoring, it is also known as the collection factoring. This is a type of factoring service in which the client sells his invoice to the factor, and then in return, the factor pays the client for such invoices either on the date of maturity or any date after the date of maturity. Okay, so the customer may be instructed to remit the proceeds directly to the purchaser of the account. So, mo ni siya tong notification basis. So, katong customer nimo, i-notify nimo nga katong iyahang account, iyahan ng i-transfer na, i-pasa na nimo dito sa bangko. So, i-notify na siya. So, katong mga customer nimo, dili na mamayad nimo, adto na sila sa factor, adto na sila sa bangko. So, the factoring firm generally does not have recourse against the seller of the receivables. In practice, the finance company may do part or all the credit analysis directly to ensure the quality of the accounts. The factoring or finance company forwards funds immediately to the seller when accounts are accepted. And the factoring company not only absorbs the risk of non-collection but also advances the funds to the seller a month or so earlier than the seller would normally receive them. Kaya diba, originally, ang tag-iya man adto kay katong entity. Unya kay gibaligya man so na-advance ang payment, advance ang collection. Dili na siya kinahanglan maghuwat pa sa iyang mga customers nga makabayad sa ilahang utang kay nabaligya naman niya. For assuming the risk, the factoring firm is generally charged a fee or commission ranging from 1% to 3% of the invoice accepted. In addition, it charges interest on funds advanced to the seller of the accounts. So we have here a sample problem on factoring. So for example, if 200,000 a month is processed at a 1% commission and 15% annual borrowing rate is charged, what is the total effective cost of financing to the firm? Pila may nagasto niya sa pagpa-factor? So that would be equivalent to the interest for 1 month, that is 1.25%. And then we have 1% of commission. And then, since this 15%, imuhang kuhaan na siya sa monthly. So, pila man ang monthly balik sa taaning 1.25%. So, that's 15% divided by 12. Kay kinahanglan man siya monthly. Kay kaning 15% is annual man. So, that's 15% divided by 12 months. Then, since ang commission given here is already a month, okay, 4% na siya per month, so that's 1%. Then you have the total monthly fee is 2.25 and you multiply it by 12 to get the annual rate because the question is annual cost of financing. So therefore, ang actual gid nga interest nga imong nagasto because of factoring is 27%. Next one is inventory loans. So these are short-term loans to purchase inventory. So a short-term loan made to a business so that it can purchase inventory to sell. So ang inventory may gihimong collateral if the business cannot honor its loan payment. So, di ba, ang reason nga naman nga nangutang siya is para makapalit siya og inventory. So, in the event nga dili nakabayad sa utang, ang kuhaon sa financial institution kay katong inventory nga napalit. In case, again, dili kabayad ang borrower. So, kuhaon niya tong gipalit nga inventory. Next, we have commercial paper, which is an unsecured promissory note with a pre-noted maturity time of 1 to 364 days in global money market. So this one is originally issued by large corporations to raise money to meet short-term debt obligation. So it is backed by the bank that issues it or by the corporation that promises to pay the face value on maturity. So to compute for the effective annual interest rate for commercial papers, the formula is interest cost per period over the usable loan amount times the number of days in a year. So it could be 360 or 365 depending on the problem, and over the days funds are borrowed. The next one is a compensating balance. So a compensating balance is a minimum balance that must be maintained in a bank account used to offset the cost incurred by a bank to set up a business loan. So some banks, before they allow the client or ilahang depositor nga, or not depositor, their client nga makapangutang sa ilaha, before they allow that client nga makapangutang, manginhanglan sila nga ang client mo deposit sa ilahang bangko. So, katong deposit ito would be a compensating balance. So, kinahanglan nga mag-deposit tong client. So, therefore, duha na kabuok iyahang persona adtong nga kumpanya, borrower siya at the same time depositor. So, katong amount nga kinahanglan nilang i-keep nga money dito sa bangko nga dili nila dapat hilabtan, so gitawag to siya compensating balance. So firms also use compensating balances to pay for non-credit bank services such as cash management services. So also, even if dili ta mo borrow sa bank, the bank also requires us to have maintaining balances, di ba? So that maintaining balances is kept by the bank and that is retained for any possible needed money nga kinahanglan nila nga i-release. So for example, if you have a savings deposit, di ba, dili man tanan amount dito pwede nimo basta-bastang ma-withdraw na aman siya maintaining balance. So, sa para sa bangko, makatabang na nga na ay maintaining balance kay in case ay para dili yun mahurot dayon ang money sa bangko nga basin i-withdraw na tanan sa tanan pud nga customer. So kinahanglan na agi ma-retain nga amount. Then you have trade credit or accounts payable. Of course, that's one source of short-term financing. So, sa pagpangutang, palangitan o kinahanglan nato og inventory. So, we just debit the purchases and we credit accounts payable. So, di ba, pag maka-incur tag accounts payable, we promise to pay our supplier or our creditor in the future. So, pag accounts payable na siya, usually that is 12 months nga agreement for repayment. So, of course, it will entail costs. The same with the other one. To compute a first for the compensating balance effective interest rate before we proceed. So, the formula is interest over borrowed amount minus compensating balance. So, ang original ani without discount, so ang formula is equivalent to interest over borrowed amount minus compensating balance. So kaning gibutang diri nga discounted, mo na siya pasabot i-minus daan ang interest. Okay? So again, going back to the accounts payable, so naatay cost in relation to our accounts payable or sa trade credit. So as a rule, with regards to our accounts payable, as much as possible, we have to take the cash discount if ever we have enough money. Okay? Although makita na to nga 1% ra, 2% or gamay ra ang percentage, kung naatay kwarta nga ikabayad without uh, natay money nga ikabayad pero dili sad mag-suffer ang atong day-to-day nga cash needs or dili ta mahutdan og kwarta para sa atong day-to-day operations. So why not pay our accounts payable within the discount period because that is a savings on the part of the company. But uh, if we are going to pay our cash discount, we have to make sure that we will pay on the last day of the discount period. Okay? Para naapalitay enough time nga maka-earn pa ta og income sa ato ang money. 'Di ba? Kung bayaran nato siya day 1 and then bayaran po nato siya sa last day sa discount period, wala may kalahian sa ato ang discount. So parehas naman gyapon ang discount kung ibayad ta sa day 1 of the discount period or the last day of the discount period. So instead nga mobayad ta sa day 1, day 2, or sayo-sayo ta mobayad adto ta sa last day. Kay nga naman ang atong money is pwede pa natong magamit for operations. Unya pwede pa siyang motubo from day 1 until the day nga mobayad na ta sa utang within the discount period. So atong money motubo pa siya. Unlike kung ibayad na to siya dayon, dili na tumutubo atong kwarta, di ba? On the last day of the discount period na na-recover na nato tong ato ang money nga pambayad, ato na siyang na-revolve, ato na siyang napuhunan, naapagyud tay ginansya. But kung dili ta mo grab sa discount, unsa man kuno ang mas maayo nga buhaton as a financial manager. So kung dili ta mo grab sa discount, we need to pay it on the last day of the credit period. And the same explanation nga ganiha nga wala na may kalahian tong day 1 after the discount period o sa last day sa discount period because even if you pay on day 1 of the credit period or the last day of the credit period, maura man gihapon imuhang bayron nun. So, mas better way is adto ka mo bayad sa last day of the credit period because again, you can still use the money to earn in some other investment opportunities. And on the last day of the credit period, pwede nang ma-recover ang katong kwarta, nanakay pambayad sa utang, plus napagid kay ginansya because you have invested your money. So, paying on the last day of the credit period will enable you to accumulate the necessary money that you will need, and at the same time, you can earn interest or you can earn profits with the use of that money. And then we have the term stretching accounts payable. So, this means that the firm may take longer to pay its bills. So this amounts to borrowing from suppliers in the form of trade credit. So a firm should pay the bills as late as possible but without damaging its credit rating. So kung kaya nga magdugay-dugay ta og bayad pero dili madaot ang ato ang credit rating, dili ta bad shot sa atong mga suppliers. So i-stretch dyan nato or maglangan-langan ta as much as possible. When a firm can stretch the payment of accounts payable, the cost of forgoing the discount is reduced. Okay? So again, kung di man ganito mo grab sa discount, di ta mo take sa cash discount, so mobayad ta sa last day of the credit period because this will minimize the cost of forgoing the discount. And the cost of forgoing a discount is equivalent to this formula. So you apply this formula, that's cash discount over 100% minus the cash discount rate times 360 or 365 depending on the problem over N. And what is this N? This is equivalent to your credit period minus the discount period. Okay? And this again, CD is our cash discount percentage. Okay? So the preceding formula assumes that a firm gives up only one discount during the year. So if the firm continually gives up the cash discount during the year, so this would be the formula kung frequent iyang pag-give up sa discount. So kanina ang gamiton nga formula. Okay? So in our next video, we will be answering some of the problems related to short-term financing. So see you in our next video.
If you like this video, please don't forget to click subscribe and hit the notification bell to be updated with the latest video lessons. Thank you for watching.